Welcome back to Options Weekly Paycheck, 7 strategic approaches for trading options for a living. 7 strategic approaches, number 5, covered calls trading. Now, covered calls trading, wait. Didn't they just get rid of that strategy because it was so lame? No. Okay, we have fixed covered calls lameness actually quite a while ago, but we didn't advertise it much. Now we're looking to maybe start to advertise it because it's such a great new approach. Now, what's wrong with covered call selling of the past? Well, it can get you into a big mess for not much reward. Okay, and what's this approach of the past? It's trying to collect premium. Okay, it's selling a covered call for the sake of looking to pluck off this premium that's just hanging out there as if it's free money. Well, there's no free money, okay? And so it's more of a trap, whereas it's a trap because you're selling these calls for this piddly return while sticking your stock out there for the potential of getting called away for little reward. Now, how about this? Covered calls always have a certain amount of risk, if you want to call that, of having your stock get called away. That means your stock goes up past your strike price by expiration, or goes deep in the money, and someone exercises the call against it. All right. Okay. So then you have to go buy your stock again if you want to use the same stock, and a lot of people have stock holdings for a long time, and they may not want to do that. Now, if you totally aren't willing to part with your stock based on a covered call, then you may want to not even get involved, although you can do methods of selling calls that will reduce your risk of getting exercised and having your stock taken dramatically. Okay, you can put yourself in a very high probability position each time, whereas your stock is 99% chance not going to get called or exercised upon. Then again, hey, you need to know when to sell the call and when to not sell the call. You need to know exactly, with a specific strategy or system, when to let your stock ride up and when to let your stock or sell a call to either stay the same or ride some momentum back down. So we swing trade in micro swing covered calls, swing trade covered calls. Covered calls can be turned into a weekly paycheck strategy, just as long as you have some flexibility of the concept of the stock getting called away. Just sometimes it happens because your stock just started taking off upwards, and you weren't paying attention, or maybe there's some big great news announcement and it popped up a bunch of points and you had a covered call on it. You'll probably get exercised. But then again, if it's not exercised and you're in the money, you can just simply close out the position and save your stock. So you can do these things too. To get any sort of tricks and details from the broker or exchange perspective, talk to your broker. Get on the phone. These guys, at least a lot of them, like to talk about this stuff. I mean, they study all that much to take their Series 7 and so on, and so they like being able to recall all that hard work they put in. And I would say, hey, so you talk to your broker. But before you talk to your broker, what I would suggest is that you write down your questions and make them really clear, and don't go on, and make it easy for the broker to answer in simple. And maybe you can break your questions down. That's something else to think about. You can also use their support. They can write you back and send you links through their support ticket system. And so that's something to think about. Hey, use your brokers. All right. Don't just sit there wondering, you can ask them all sorts of questions. Look, they're making money off you, and it's in their vested interest that you become a good trader and a frequent trader because they'll make more money. Okay, now back to covered calls trading. There's a lot of opportunity on the micro swing level. There's a lot of opportunity using micro swings and weekly options. We can pinpoint precisely target a very specific strategic setup with a variety of our different methods, and we can just start to clip off momentum and let that rapid, fat, juicy premium, it's a fat, juicy premium rapidly decay. Let me rephrase this. So we want to enter with a precision, specific, purposeful approach based on one of our many strategies, or strategy in a system, and then sell these plump weekly options that have a few days left to expire, where these weekly options in their plump premium are rapidly melting options premium, which we can collect in addition to riding momentum. So we don't want to just collect premium. We want to combine our covered call selling with a particular strategic, exact entry and exit mechanism that will or can position ourselves for taking out momentum and either covering that call, or closing that position, or letting it go into expiration. Now, hey, if you can ride a couple points while putting premium on your side on a weekly average basis, a couple options points that is, and let's just say you sold 10 contracts because you have 1,000 shares of a stock and you're able to swing trade it. Well, now what are you able to do? You're able to take out a couple $1,000s of a paycheck from the markets, and if it's out of the money, all right. Now, sometimes I may mix my verbiage because of binary options, but if it's out of the money, then you can go for expiration if you want. But hey, if you're on the edge there with your stock that you may want to keep, you just may want to take the money and be done. And so, but the advantages with a weekly option is if you are selling that weekly option, it has very rapid premium decay, which is really annoying when you're buying the calls and puts. But when you sell the calls and puts, boy, it's nice. You feel like you're running downhill, right? And it's just a lot easier. And so, therefore, you can add to your profits and to your good feelings by having this sold call melt premium into your account in addition to momentum, which you can add on additional, profit points. Depends on what you're selling. And but in this example of a 2-point swing, let's just say it took 3 days to happen. Well, you may even melt an extra $1,000 as a paycheck in addition to the 2 points of momentum in your options because of premium decay in a sense. And that's an example for a picture. You have to check out your own options on your own stock to see how much the premium decay decays over the week. And you can just simply do that by taking an at-the-money position and dividing it by 5. You can divide by 7 if you want, but if you're in the week, you have 5 trading days. All right, so we have this new site called Covered Calls Mastery. We also have the Options Trading Authority site. Now, we have the Covered Calls Mastery concept which originated at Options Trading Authority. Right, so now we wanted to develop that out a bit more because Options Trading Authority is so overloaded with products that we made this new site here, Covered Calls Mastery. So we have different strategies and products over there focused on covered calls, and one main program just to kind of get us all focused on developing out our own retirement portfolio, and do so on purpose and do so strategically, because those wealth building types of things don't happen by feeling. It takes cerebral action to strategically plan and to strategically take the action to develop out this covered call portfolio. Some of you may have a big stock portfolio already, and you may be able to be in business pretty quickly by learning a systematic, strategic approach to covered call selling. And then we have also, besides just selling the calls, we have profit enhancers, which can turn your covered call portfolio into a pretty dramatic cash flow machine, okay, and do so in a smart way. And so whether the market's going up, sideways, or down, you're making money, okay, and then you're making extra money. So you'll want to learn about these covered call enhancers as well. So we've resurrected covered calls, and we call this Covered Calls 2.0. And let's throw out the old way because it's lame, and let's do this new way because it's smart, strategic, and it's very business-like, and every part of the move is controlled specifically, so you can manage your covered call portfolio like a business. That's it.